Alright, now we move on to our next chapter, chapter 6, preparation of the financial statement. But this one is for the pre-adjustment. Pre-adjustment, it means that before any adjustment. So this is our learning objective. So after completing this chapter, you are able to understand the component of the financial statement, which consists of statement of profit or loss, and the other one is statement of financial position. So we have two here. Number one is statement profit or loss. Number two is statement of financial position. So we have to know how to prepare the pre-adjusted statement profit or loss, and then to construct pre-adjusted statement of financial position. So there are two things here that you are able to do, that you are able to construct. Alright, and so this is the introduction. Financial statement provide information about the result of the business operation and the financial position. And the other one is that this information, so the financial statement is going to use by the user to make various decision, right? Decision as what? Decision to invest, not to invest, whether to finance or give the financing or not, and then the allocation of the resources. And then the financial statement consists of statement of profit or loss, again, and statement of financial position. So normally this one you're going to prepare for 12 months period. Alright, so this is a statement of profit or loss. So statement profit or loss presents the revenue and expenses in order to assess profit or loss. So it means that here we have to compare the profit and loss in order to get for the profit, okay, or loss. Okay, so next one. So this is the how to make you understand better. So this profit or loss, it means that the revenue and the expenses. So if the revenue is more than expenses, so we get profit. Okay, if our revenue is less than our expenses, or our expenses is bigger than our revenue, our revenue, so this is loss. Okay, so this is the comparison or the difference between revenue and expenses. Alright, so this is the formula how to get the profit or loss. So how to get the loss, the profit or loss. So profit or loss, so we have the gross profit. Alright, so how to get the gross profit before we get the net profit or net loss? The first thing is we have to take our sales and minus of cost of goods sold. Then we are going to get our gross profit. So what is cost of goods sold? So cost of goods sold is our opening inventory plus with net purchase. So it means that net purchase here, it refers to the purchases and then return outward. So purchases minus return outward. So net purchase, and then plus with, okay, plus with net purchase, and then plus with expenses on purchases. Expenses on purchases, some sort like insurance on purchases, right? Other than that is carriage inward. So it means that here, this is the two costs, it will increase the value of purchase. Alright, and then we minus with closing inventory. So this is refers to the cost of goods sold. So sales minus cost of goods sold, we are going to get our gross profit. So after we get our gross profit, alright, we have to add a plus with other revenue. So other revenues here, it means that here the revenue that we receive other than normal trading or other than routine of the normal business, some sort like commission receive, rental receive, and so on. So we have to add all those things. Now we get the total revenue. So how to get net profit? After we get our total revenue, we minus with other expenses. all the expenses other than cost of goods sold is put under here. So we are going to get net profit or net loss. Okay, after derive the net profit, okay, from the statement profit or loss, so the next step is we are going to transfer the amount of net profit or net loss to the statement of financial position. So in this statement, so we are going to adding to the capital account. So in the case of net loss, all right, so the amount will be deducted. So it means that here if the company is making profit, so it's going to be add with the capital. So it means that the growth of the capital is increased. But if the company is making a loss, so here the amount, it means that capital is going to be deduct. So it means that the capital of the company is going to be reduced because the company is not making profit. So after we derive the net profit or net loss, so we are going to transfer to honest equity, all right? So honest equity will come back equals to that previously, right? So it's going to be equal to opening capital plus with net profit, okay? If net loss, we are going to minus, okay? All right, statement of financial position is to provide information about the business position. So this statement should actually shows the asset, liability, and honest equity of the business at the reporting date. So in the statement of financial position, assets are classified into non-current asset, tangible asset, and current asset. So this is the classification of the asset. Alright, so here net asset is actually asset bought, not for resale. So it means that here, for example, if the company bought the machinery in order to produce the product, so that one is not for resale, right? Okay, or the fixtures and fitting, so that one office furniture, so that one is not going to be resale. So that one is considered as non-current asset. And the useful life of the asset is more than 1 year. So it means that here it can retain in your business, can be used more than 1 year. Some sort like motor vehicle, fixtures and fitting, and office equipment. Alright, so what is current asset? Is actually cash or cash equivalent that can converted into cash within 1 year. So that is a current asset. So for example, here cash in hand, cash at bank, inventory, and account receivable. So inventory and account receivable we can convert into cash less than 12 months. Right, for the liability, so it also can be categorized into non-current liability and current liability. So any amount owing the business not repaid within 1 year, so it means that more than 1 year, so that one is going to be classified as non-current liability. Mortgage on land and long-term, for examples, right? So this is refers to the non-current liability. What about next one is the account payable and bank overdraft. So account payable, bank overdraft are categorized as under current liability. Why current liability? So this one is amount owing under current liability need to be repaid within a year. So it means that here this one we have to pay less than a year. So it means that is considered as a current liability. So here under statement of financial position, we have three things. We have the assets, we have the honest equity, and then we have the liability. As I mentioned earlier, so asset falls under non-current asset, current asset, and also we have the intangible asset. So honest equity, we have the beginning capital and then profit, where the net profit you are going to add, or loss we are going to minus. And then liabilities also, we have the non-current liability and current liability. Alright, so format on the financial statement, so please refer to page 79 of our books. Alright, thank you.